Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Over the next few weeks and months, you're going to hear a whole lot about the debt ceiling. Now, I have talked about the debt ceiling in a previous video the last time that this was a crisis, but today I really want to hone in and talk about the differences between the national debt and the national deficit and how those two things are related. If you want a more deep dive detail into where we are financially as a country right now in terms of our debt, the deficit, and the debt ceiling, let me know in the comments right now because I have some interesting information that I would like to share, but only if y'all want it. I got a whole whiteboard and stuff ready to go. Y'all just need to let me know. All right, so let's go ahead and get into it. The deficit is basically the shortfall between what we brought in from taxes and what we spent. For example, as an individual, if you made $50 and spent $100, the deficit for you would be $50. That's it. You spent too much or you made too little. Whatever side of the equation that you want to look at, that is how you get the deficit. The deficit right now for the United States is about $1.4 trillion, 1.38 if you want to be exact. That is what we owe, and that's the gap that we have. Now for the US, when you have the deficit, that's basically what you put out in bonds. When we say the national debt, it's basically who do we owe in terms of U.S. bonds. The majority of U.S. bonds right now is still held by U.S. individuals. That's me, that's you, that's banks, that's your pension fund, and then you've got other countries, China being one of them, Japan, so on and so forth. But that's basically what it is. When we are going to default on a debt, or at least the threat of defaulting on that debt is not paying bondholders. Again, me, you, banks, so on and so forth. So that is how you get the deficit. How do you get the national debt? Now the national debt about now, which literally grows every second that I talk here, is about $31 trillion. Well, how do you get that number? Basically the deficit, it just keeps growing, right? You owe money this year, you owe money next year. That is how you get the national debt. The deficit is just what happens in 1 year. The debt is what happens cumulatively. And basically you can look at it like, let's say your credit card, right? You had a deficit, you had this much cash, but you spent over that amount and it just gets added to your credit card balance. That credit card balance for us is the national debt. That is basically it. Deficit is what is that gap between what you made and what you spent. The debt is the total amount that you've accumulated over that entire time. Now, how do we get here in terms of the total national debt? Technically, it started around, I guess this would be around 2000 or so. The first Bush presidency is how we got here, because when Clinton left office, we had a balanced budget. What we made, what we spent, everything was fine. Initially, we had the Bush tax cuts. Remember, when you reduce your income and you keep spending the same money, you run into a deficit. That's kind of how it happened. So it started with the Bush tax cuts. Then, if you remember, we went into the Iraq and Afghanistan war, which was extremely expensive. So we cut our salary. We cut our own salary. That's what a tax cut is. And we spent way more money on war. That's how you get the national debt. Then the next president came in and extended those tax cuts. So it just stays there, right? You keep cutting your own salary. Then the next president came in and cut taxes even more. That was Tax Cuts and Jobs Act 2017. So you reduce your salary even more and you keep spending. And obviously, as you remember, we ran into a pandemic where we were forced to spend more money. In fact, the deficit during 2020 was $3 trillion. That's double what it is right now. Remember, the deficit now, or at least the previous year, was $1.4 trillion. The deficit in 2020 alone was $3 trillion. Okay, so it's going in the right direction. It's cut in half, but it's still quite high and adds to national debt in either case. So basically, we kept cutting our salary through all these tax cuts and extensions, and then we kept spending more money. War, COVID, boom, here you are. So the only way to close that gap and to reduce the deficit completely and or eliminate and pay down all the debt is to either cut spending, which, is healthcare, Medicare, defense, all that kind of stuff, and or increase the money that you make from taxes. So maybe it's saying that, I don't know, I think the stat was there are 55 companies inside of the Fortune 500. That was the stat that was stated at the State of the Union. but there are 55 companies inside the Fortune 500 that pay $0 in taxes. So I could either A, raise taxes, which nobody wants, or two, make sure that there is a minimum tax for anybody who, if you're a corporation, you make over $1 billion, the minimum you have to pay is 15%. So that brings in more money on the top line, right? You bring in more income, then you're more able to reduce the deficit and pay off some of the debt. Either side of the equation, or both if you ask me, is probably the best way to do it depending on what you want to cut, if you don't want to cut anything at all. But in either case, that is how we got here, and that is how you can explain the difference between the deficit and the debt. Now, the last thing I'll say is this. If you want that full video on how you can break it down and really see like where the money is coming from and what else you may want to know, what tax proposals are out there, we can definitely talk about that. Remember when we did talk about ExxonMobil, I think they were doing like a 65, if I remember correctly, it was like a $65 billion stock buyback. One proposal is to have either a 1% or even a 4% tax on that. So it's like, look, you were just going to spend the money enriching yourselves. You weren't going to invest. You weren't going to pay your employees. You weren't going to at least give dividends to investors. You want to buy back your own stock, which is generally unproductive. Why don't we tax that? And that's one way that we could reduce the deficit. The estimations from the Washington Post and others is that that could reduce the deficit by $300 billion over, I think, 10 years. So that's one way. But in either case, let me know what you think. If you want a full video on that, feel free to let me know in the comment section below. Like and subscribe. That helps me help you do more videos like this. And then lastly, make sure that you join the members only. We do exclusive videos each and every week for deep dive questions and detail. All right, that is it for me. I'll talk to you tomorrow. Bye.